Well, Dalal Street failed to hold on to its recovery on Friday to end the day in the red. Broader markets underperformed, kept the market breadth in favor of declines. And for the week, the market reversed its gains seen in the last 2 weeks to end in the red. Apart from the auto index, all sectoral indices ended with cuts. Hello and welcome to another edition of the Editors Roundtable. This week, we'll take stock of the government's OFS strategy and put the spotlight on TVS Motor. I'm Sonia Shenoy, with me Nimesh, Prashant, and we have Rahul Arora here with us in the studio. So, welcome to all of you. This was a slightly tough week for the market. We have a huge geopolitical crisis which is underway, a humanitarian crisis underway. And of course, it had its ramifications on the market with Brent crude surging, risk aversion, gold prices went up. So all in all, it was not a very comfortable week to be a bull in the market.
I mean, absolutely, Sonia. It's, as someone in the morning said, I think on the show, he said, the Indian market reminds him of the James Bond movie, Die Hard, right? I mean, but I think it's coming to a point where those analogies are also not starting, they're starting to falter a little bit because I think towards the end of the week, which is Friday, Thursday, you're starting to see some weakness, creeping in.
And that weakness broadly in the broader market, that was a bit of a differentiating sign that, for the last many weeks now, the broader markets have really outperformed, shown a lot of resilience. That seems to be giving up now. A bit of hesitance there as well, some bit of profit booking as well. So I guess first signs of some bit of cracks in the broader market was clearly visible.
Absolutely. Rahul Arora is also here with us. Rahul, do you feel the same, that this is a slightly uncomfortable situation in the market? Or on the macro front, of course, there's the geopolitical issue, but even the earnings have not been that impressive up until now.
Yeah, so I think, first off, thanks for having me on the show. I think, even prior to the Israel conflict that happened, as unfortunate as it was, as you said, I think somewhere around 20,000, you needed a lot better in terms of earnings. And I think, yes, you had an odd large cap technology company and an odd Bajaj Auto that's done all right, but, overall things have been sold into and they haven't really latched on. So I think valuations are definitely becoming a concern. The US yields have hit 5%. That's another thing that's a bit disconcerting. And the commentary coming out of the US Fed is increasingly, more concerning. And the way the kind of, the US Treasury, the way they're buying up in the US is unprecedented. I mean, I was just looking at the way that part of the balance sheet has ballooned over the last 3 years. So I don't know, I think 2024 as a calendar year could land up being very challenging, which is basically FY25's results. And in that backdrop, I think deploying fresh capital at this point could be very tricky.
I mean, actually, to that point about the borrowing there, I think in his speech, US President Biden said that I'm going to go to Congress and ask for more authorization, right? I mean, it's just incredible, mind-blowing. You thought that the deficit and the debt numbers in the US were already at astronomical levels, and now they're doing more. And this is not for the US itself, but it is to send to the Middle East. It is to send to Ukraine. So absolutely. I'll just take 2 minutes to kind of summarize some of this stuff that Rahul has been sort of pointing to. So market conviction remains pretty low. I mean, I think that's the way to put it. It's not as if people have turned bearish or people have kind of given up that markets are going to see a big drop, but conviction levels have dropped off. And I mean, there are a multitude of factors, I think, which explain that. There is this uncertain kind of continued fallout because of geopolitical events, although I would say, markets get used to it. The intensity of the reaction to a given event reduces over a period of time. And we've seen that in the war in Ukraine, the same thing happened, and so many other times in the past. But it's a volatile situation still. And the immediate fallout for a country like India, of course, is oil. Oil's above $93. We can say as much as we want that the macros are in much better shape and we're able to withstand oil at 93, etc. But it doesn't help. It hurts maybe to a lesser degree at the margin. 10-year yields, which Rahul mentioned, 5%, but I mean, the US is continuing to borrow at unprecedented levels. And by the way, the other factor which people have started to talk about again is the last debt deal, which was done was for 45 days. It comes up in November again. And this time, a lot of people are saying, because, I mean, you don't have leadership. The third most powerful person in the US, the House of Representatives Speaker, was fired, basically, and they don't have consensus on who that person will be. The chances of a shutdown in the US government is much higher, when that deadline comes up again in November. Yields at 5%. Message from Powell on Thursday was higher for longer. So the impact here economically perhaps is lower, but if global markets start to falter a little bit, will markets here also take note? I think these are some of the things. And of course, we are also, by the way, getting into election season now here in India, right? So MP, Rajasthan, Chhattisgarh, and opinion polls do suggest some setbacks with the ruling dispensation, at least in some of these states. So we'll see how that goes. Bank Nifty is the weaker of the two indices. I mean, the Nifty has been kind of treading water around the 19,500 kind of levels. Bank Nifty has been the weaker one. Bank Nifty hit the August lows, which the Nifty has not. But if you look at the price action, Thursday we got to that just under 19,600. Friday, the low of, we basically got back to the low of Thursday. So are we starting to see, I would kind of say perhaps no, but I mean, it's a question at this stage. Are we forming a bit of a double bottom here on the Bank Nifty? It'll be great if that is the case. But as I said, I mean, I would not bet money on it that is the case, because, I mean, overall the environment seems to be quite adversarial. Rahul, what are you telling clients to do at a point like this? And also tell us what clients are asking you. What kind of questions are you getting?
So I remember we had this question when the Nifty was at 20,000, Prashant. I think a lot of people are asking what to sell. And I think that's also a mindset, right? And I could just throw in one more anecdotal data point to what you said. A lot, the strength of the US consumer is still in good shape. But the point is, I think one point that people are missing out is that whatever dispensation the students in the United States had, those payout, the extension of that is also coming to an end. Now the question is, how is this part of the economy going to play out? And this could also have some serious ramifications. I think the unfortunate part out here, like we were discussing, is that earnings haven't sort of been a cracker, right? I think if you look at Bajaj Finance, HDFC Bank, DMart, these are stocks that are so well priced to perfection that there is very little margin for error. I think even an inline result is been sort of sold into, IT. If the US does go into a slowdown, it's only going to get more accentuated from here. Lever and ITC were a huge disappointment for someone who's been looking at the sector for almost 2 decades now. Like you really can't fly with 2-3% kind of volume growth. So my sense is, and I think you've seen this in terms of flows as well, and maybe Nimesh Bhai has also seen this, a lot of money is going into pharma, and I think you're seeing a lot of pharma NFOs come out, even at this level. I think HDFC Mutual Fund is also in the process of launching one. So I think there is probably one pocket which looks okay, and I think just on the basis of what we've seen so far through a Dalmia or an Ultratech, I think cement could be. I think these could probably be a couple of sectors to hold out for the second half of this fiscal. But otherwise, it's going to be, you got to sit with a microscope to sort of find ideas that will give you substantial returns over the next 1 year.
Okay, so pharma and cement are two spaces that you like for the near to medium term. Got it. Nimesh, what are the dealing rooms telling you about how the week has been? It's largely been a sell-on rally market. I mean, we ended 1% lower for the week. Yeah. But is that the expected trend?
Sonia, 1% for the week, but the fact is that for a long time now, India is continuing to ignore the weak global cues. Yeah. Look at what Rahul pointed out, Prashant pointed out, the 10-year at 5%, crude is still at $90, dollar index is at close to 107, and still markets are not falling as to what the expectation was. I guess one reason for that is the fact that there is so much of domestic liquidity which is supporting the market, especially the broader markets. Only in the last 2 days we've seen some bit of cracks in the broader market. So that is something we need to monitor very closely. The sense I'm getting is maybe we'll be in this range-bound market for the next couple of weeks. I guess earnings is going to be a big driver to dominate the near-term trend, so that's something to watch out for. But I guess going forward, the other big trigger will be the festive season demand and how that shapes up, because that will have an impact on a lot of sectors, the consumption names, the auto names. Those will have a big impact on the stock prices as well. So I guess that is something one needs to monitor very closely. The other reason is the FIs are continue to be net sellers, right? So that's again a bit of a problem, that there is no big support coming in from the larger FIs, so to speak. The only domestic liquidity is what helping the markets to outperform. So need to see how that can continue for a longer period of time. I just want to quote a line from Lawrence Blanco's note today morning. He put an interesting piece, right? And he's saying that for India, right now we just need to be patient. It's just, I think India is just going through that corrective phase. So he's not calling for a top of the market or markets can crash very heavily. It's just that we are in a corrective phase, so that can continue. But broad sense is that market will just be in the range bound. But because of the earnings season and the festive season, some important stocks may react on either side. So that's something to track going forward.
Okay, we had some earnings and spaces that you track very closely, right? HUL, ITC. The stocks actually ended lower by the end of the day. The numbers were not bad, but not impressive either. What was your big takeaway from an investor standpoint?
So I think the story continues to be margin expansion. I think if you look at, say, Nestle and Lever, the gross and EBITDA margins were at multi-quarter highs. I think if you sort of nitpick and go down all of these companies, broadly between 7 and 11 quarter highs. So you're talking about 2-3 year highs. But the problem still remains the top line, right?
Yeah.
So I think if you look at a Hindustan Lever between, let's take the last decade, FY13 to the last completed financial year, FY23, Lever's top line compounded by only 8.8%, but the margins went from 15 to 25. So your operating earnings compounded by about 15%, and because these are cash-rich companies, you have another income component, your profits compounded by 17-18%. So the point becomes, are you buying these companies for volume growth or what, or what? Similarly to, I remember there was a time people used to buy IT companies for rupee depreciation, buybacks and dividends. You basically want to see growth, right? And I think that's kind of missing. Nestle, remarkable numbers, I think, to grow double digits, but then again, 68 times, it's like walking into a store or liking a dress or a suit, and the guy saying
it's too expensive.
Yeah, like the guy says 3,000, okay, 5,000, you're sort of okay. At 7,000, you say, fine, I love the suit or I love the dress, but it's yours. So I think that's the point. I think and that's the point I was making about stock.
How do you know my shopping experience, Rahul?
So, I was just shooting in the dark. But I'm just saying that the point I'm trying to make is things are either priced to perfection or they are not delivering growth. To the point Nimesh Bhai was making a little while back, I worry about consumer discretionary as well, Sonia. I think, on a lighter note, just before we went on the show, we were looking at hotel room rates in Calcutta for the India-South Africa. These are not hotel room rates that you can sustain. This is the peak.
Oh, absolutely.
PVR, I think, I happened to meet Ajay Bijli on a holiday recently, and we were just discussing, and he's like, this kind of a quarter is going to be very hard to replicate. And so you may be at the peak for a lot of sectors. And it's not just because the numbers are good. Take a look at IT, right? The US hasn't gone into a slowdown and you're having these kind of numbers. Imagine if the US does go into a slowdown or a recession, you're not going to be talking about compounded quarterly growth rates. You're going to be looking at negative numbers, and some of these have already come out, like Wipro, etc., are already in the negative. So he makes a very valid point. It's a 40 lakh crore mutual fund market. I think if 50% of that is equity, you're looking at 20 lakh crores of equity AUM in the market. And if funds are sitting on about 5% cash at any point in time, that's 1 lakh crores of liquidity that just domestic mutual funds are sitting. You add insurance, AIF, PMS and LIC, you're probably looking at about 1.5-2 lakh crores of domestic liquidity at any point. So will the market crash? I don't think so. But can you have a situation like, say, HDFC Life Insurance where you go into a very long time correction? That is extremely probable, and it seems likely that it's going to be on the cards.
Okay, by the way, did you all book that hotel room for the India-South Africa match?
But I just want to add to that point of what Rahul said. You spoke about HDFC Life not giving returns. I was just looking at a 2-year and 3-year CAGR for the large Nifty companies. Stocks like HDFC Bank, ICICI Bank, a lot of stocks have actually given negative to zero returns in the last 2 years. So a lot of people say, you buy the defensive, buy the large caps, but they've not done anything for the last 2-3 years. So there is absolutely no return in many of the large
There's also
companies.
a reason for that, Nimesh Bhai. I think, especially when it comes to financials, you need to seek a regulator approval to hike your stakes. So I think what's happening in a lot of mid and small caps, if you look at, say, HDFC Mutual Fund, SBI, a lot of these guys are taking their mid and small cap holdings to 9.9%. And that's what's driving valuations up. So, it's very challenging for the sell side because you can't expand your earnings. Then you start taking your multiple into the land of the absurd. And we're all contributing to it, right? Like we're all doing SIPs and all of that. So it is basically our money that's coming back into the market, and that's what we're chatting about.
Rahul, you mentioned PVR. We also actually spoke with them yesterday. But there were doubts about the validity of the multiplex kind of exhibition business a couple of quarters back, because there was this debate about whether it's the movies or because of OTT and COVID, etc. The way people experience and consume these things has changed. I think that is settled now because we got good movies, and they had the best ever quarter, right? Any thoughts on PVR per se beyond this quarter? As a business over a period of time.
No, so I think you've hit the nail on the head. I was actually listening to a podcast that Sunny Deol had done with somebody who does podcasts for a living, and the question asked to him was, did you anticipate this? And he said, no, not in my wildest of dreams. The point is people want to go to the theatre.
Correct.
So I think that is settled, where if a person who's making the movie has not the slightest idea that this is the kind of business it's going to do, what it's telling us, people want to go to the theatres. I think, Prashant, what's going to happen is content is unpredictable, and I think the turning point for India started with an SRK movie, and then you had Barbie and Oppenheimer. Let's not forget, Hollywood's not been working for a while. This is going to show up with a lag. You're not going to have that kind of Hollywood content maybe for the first quarter of the next calendar year. The World Cup's a bit of a lull, and I think there's an SRK movie waiting for us and a Salman movie with Diwali and Christmas. So this quarter may not be as strong as the previous one, but my sense is if content becomes a little more predictable as it was, say, in the 2 years running up to COVID, where you had Ayushmann Khurrana, Rajkumar Rao, the late Irfan Khan contribute materially to that, because those guys started delivering 100 crore movies beyond the Kapoors and the Khans, you know. So I think it's a great stock. If content is good, I would stick my neck out and say that this could be a 23-2400
Bollywood has got to deliver. The PVR will deliver, but Bollywood has got to. Bollywood and other.
Exactly, and you're seeing that you've sort of hit the nail on the head. I think if you look at PVR's break even, it's come down to 20% on occupancies. If their ad rates go back to where it was pre-COVID, that may even come down to say 18.5%, 19%. That's huge operating leverage. All you need is content to go right. And like I said, this could be a 23-2400 rupee stock.
Okay, well, Nimish, what are you going to talk about today?
Well, you know, Sonia, selling is always a dilemma, right? We don't know when to sell. And that's a dilemma for the biggest owner, which is Government of India. But I'll tell you, government has done a good thing. They've timed it very well as far as the offer for sale is concerned. Why I'm saying this, let me just go to the wall and explain. I have the data backing it as well. So just look at what government has done in terms of OFS. In FY23, they've looked at timing it very nicely. In this year, they've done 5 OFSs, of which all have given positive returns post the OFS. That's a big, that's a big thing that they've not given negative returns after the OFS. So look at the first stock. The stock of the week this week was Hutco. The government decided to sell 7% stake in Hutco via OFS. They launched the OFS this week. The offer price was at 79. Allotment also happened at 79 rupees. The current price is just 2 days old, so we can't read into the performance. But currently trading at 70 odd. Need to see how the stock performs going forward. But going into the OFS, the stock had already rallied 16%, almost 60% in the last 3 months. So now this is the Hutco. Now look at the first stock, the recent name which got where the government did an OFS, which is SJVN. Now, SJVN, the government sold close to 5% stake in September 23. The offer price was 69. The allotment was also happened at 69. And the current price is around 75. So the post OFS, the stock has given a 9% return. But going into the OFS, the stock had rallied 75%. After a 75% return, the government did OFS. And after that, the stock has still given a 10% positive return. That is SJVN. Look at the second stock now, RVNL. In RVNL, the government did a OFS in July of 2023. They sold 5.6% stake. The floor price was 119. The allotment, in fact, happened at a higher price, which was 121. And the current price right now is 170. So the stock, after the OFS, has given close to 40% return. And heading into the OFS, 3 months before the OFS, the stock had rallied close to 22%. So even in RVNL's case, there has been a positive return after government diluting 5% odd stake via OFS. The third stock on my list is Coal India. In Coal India, look at what the government has done. They sold 3% stake in June of 2023. The floor price was 225. The allotment happened at a marginal premium, which is around 226. The current market price is close to 320. It means a 41% return after the OFS, what Coal India has delivered in the last 3-4 months. Going into the OFS, just 3 months prior to the OFS, the stock had rallied 10%. So even after a 10% move, there has been a 40% up move in Coal India as well after the OFS was done. Look at what happened to the other stock, which is HAL. This is very interesting. This was the third OFS from the government. They did an OFS in March of 2023. They sold 3.5% stake. The floor price adjust to the adjustments was 1225, and current market price is close to 2,000 rupees, which means even HAL after the OFS has given a 60% return in the last 6-7 months. Going into the OFS, the stock was actually flat, just 2% return. But the key line is that post the OFS, most of the government companies had delivered positive returns. Now, as far as Hutco is concerned, I started with Hutco. The fact is, let's look at Hutco because we don't know how the stock is going to react and how the stock will perform. But for Hutco, the big trigger is the change of guard. They've just appointed a new MD and CEO who's taken charge at Hutco. Now, after the OFS, need to see how the stock performs. But generally, we've seen in the past that the change in management has led to a re-rating as well. The OFS is done, the new management is appointed, so need to see whether Hutco also does well. But the bottom line is, post the OFSs, at least in FY23, all the 4 stocks had delivered positive returns.
All right, Nimesh, thanks a lot for that. Let's slip into a short break on that note. But on the other side, we continue to decode the market action. We'll also tell you what are the big cues that you need to watch out for the week to come. Welcome back to the Editors Roundtable. Now, we're going to talk about India's presence which is quite unmissable in the global two-wheeler industry. And TVS Motor as a company has just surpassed Yamaha in market cap to become the 3rd largest two-wheeler maker globally. So, I just wanted to, take you through the kind of data that we have on this particular subject. If you look at the global two-wheeler industry, right? Bajaj Auto, Eicher Motors, TVS Motor, Yamaha and Hero MotoCorp are the top 5 players. So in the top 5 players, you have only one player that's not Indian. All others are Indian two-wheeler makers. So that is the kind of presence that the two-wheeler makers have in the global two-wheeler fraternity. Bajaj Auto has a market cap of $19 billion, followed by Eicher Motors at $11.5 billion. And the big story here is that TVS has surpassed Yamaha. TVS now has $9 billion market cap, while Yamaha has about $8.8 billion. This data is provided to us by Bloomberg. But if you look at it, TVS has a lot of things going for it. Its margin trajectory has improved substantially. A couple of years ago, TVS Motor used to struggle at about 6 to 8% margins. Now, consecutively for the last many quarters, TVS has been sitting with 10% margin plus. Of course, it's still much lower than peers like Hero and Bajaj Auto, but it is making strides to get there. The charts will be up for you on your screen. It's been, I think, 10 consecutive quarters now that TVS Motors has sat with 10% margin plus. So that's been the kind of stability over there. Even if you look at its market share across all segments, whether it's scooters, two-wheelers, three-wheelers, even in the export market, the market share of TVS Motor has been going up. And recently there was a brokerage report which suggested that TVS is now becoming an export engine, and that is the next big growth driver for the company. The export contribution to its revenues doubled in the last 5 years. It was 16% 5 years ago. Now it's almost 30%. And if you look at the 5-year compounded growth rate as well, it's been in double digits. So very quickly, before we end the show, this two-wheeler space has had its fair share of problems, but TVS has emerged as a big player. Is it too late to get into that stock now?
I don't think so. I think the competition TVS has is Bajaj Auto. So I think if you want to play mass, you're still with Hero. If you want to play premium, you're still with Eicher. I think this is a direct competition, and I think after what Bajaj Auto has delivered, if TVS is able to match or better that, I think you'll see some alignment. But I think it's not too late to buy them. The return ratios support the margin expansion, support the valuations. I'd be a buyer in both, is my sense. I'm reasonably indifferent, but the good part is that at least they're attacking Eicher's segment right now. Let's see who wins, but they both look interesting at this price.
Okay, well, we've actually run out of time, but thank you to all of you, and thank you to our viewers for joining in. Thanks, Rahul. Have a great weekend.
Thank you, you too.
Okay, with that, it's curtains down on this edition of Editors Roundtable. Thanks for watching.